What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, events, and some potential stock picks to get you prepared for the week ahead. Consider subscribing as I do provide daily updates as well to get you prepared, as each and every day is quite pivotal, especially in a market like this. So let's recap last week. Now, last week there wasn't any major event that I could see that would have any pivotal move. But coming into this week, after coming off of a very historic third 75-point basis move, I was expecting this week to potentially break. I was waiting for that pin to make this whole thing cave on that 36.36 mark. Tuesday, it almost did just that. It tested the lows and was pushing extremely low and made it all-time yearly low on Tuesday. And then, which something that was really interesting, well, we got this big green candle, as Bank of England came out with some temporary quantitative easing coming off of a previous Friday in which they were looking for some way to pay off their debt. And so, nonetheless, um, Europe is in a very, very bad situation. There is a lot of issues going on with their oil pipelines. Obviously, there's been some mischief going on with the oil pipelines. So now Germany's hardly getting any oil at all. There's been rumors that potentially UK oil pipelines now might be manipulated. Um, Things are really bad, and we can only pretend or look the other way for so long. The biggest problem here being is that we are affected dramatically about what goes on in Europe. And Wednesday is a good reflection of that. Because when Bank of England announced that they were starting to buy bonds, our bonds took a massive rip up, which in turn gave us one huge green candle uh, during Wednesday. They announced when they were starting to buy bonds, and then they automatically just started buying bonds, and that caused us to rip. The problem with that being is that it was only temporary, as you can see. We finally broke on the last hour of Friday in a month. We finally broke what's should have been probably earlier this week. I've even called on Tuesday that we were going to hit panic on Wednesday, and that's when the Bank of England came out with an announcement that they were quantitative easing. And so, as you can see, and also something I talk about, right, is that things change on a dime. Right, the next morning they announced that they were quantitative easing. It was emergency quantitative easing announcement, and they were just automatically starting to buy bonds. And so for us, we're like, okay, well, that means we're going to buy bonds. There's going to be some quantitative easing for us as well. But nonetheless, it all turned out to be a bunch of hoopla and false hopes. And we ended up breaking anyway on Friday. Now we are in a panic. The thing is, it's a recession. We see it coming. This is the big thing. This is why haven't seen full blown limit downs at this point. It's a recession. We'll just continue to melt off. Now, coming in Monday, it might be a different scenario. We broke a very, very key level that we've been holding all year. The question is how much further can we drop? Again, average recession is roughly around 43%. So let's take a look where we're currently at right now. Now, I still have to pull this all up as well, my weekly stuff here. So just be patient with me. So right now we're sitting at roughly 25.65 on the year as a correction. And average, again, recession is 43. So you're looking roughly around that 27.33. It's pretty close to that 200 monthly. I just marked this out. I didn't have this marked out, but I just actually marked this out before I did this video. Now, typically, again, something I've always stated in the higher time frames, as far as these EMA supports, we don't get that close. If we start getting close, that means we're going to break. I called that out up here as well when we were coming close to the 200 weekly. And we came close. We actually broke it briefly and then popped back up over it. Actually, it was down here when it first tagged, and then when it came back down the second time, kind of is what pinned us. This is kind of what pinned us all week, to be honest. Is that we were stuck essentially between the 200 weekly and the 500 EMA monthly. So we were bouncing back and forth in this tight range, and then finally broke on Friday into a new level. Now, this is again very critical how we open Sunday, how the futures open Sunday night. And if we can make sure that we're above come Monday pre-market, we're either back above the 36.12, or if the monthly candle opens below here, we are in for some major flushing. And something I've talked about to this point is that this was the leg I was watching, and things are playing out exactly how I thought they would, as far as potential the next leg down. And that's what we're seeing now, in that things are getting worse. Things are not getting better. Inflation is rotating. Again, something you're probably tired of me talking about is the fact that now it's into rentals, because that's where the demand is right now, and that demand isn't going to come down, because now people are starting to try to sell their homes. Coming to find out that people are spending a lot more, which is concerning, considering the national savings rate is way down, considering that credit cards are roughly around a 35% growth rate, which is not good. And I'm curious as to what people are thinking going forward. And people are making purchases, obviously, that they can't afford. And this is leading to this unfolding that is spiraling out of control. And so let me go ahead. So that's pretty much technical wise. I know I started out with that. Normally that's something I finish up after I bring up my my weekly outlook, but I wanted to really kind of look over, especially talking about last week and kind of what was going on there. But this leads us to the next thing, and this is what we got for this week. This week we have a lot of Fed members speaking yet again. You're going to have Bostic and all them on. I don't believe there's any Powell that I can see. Again, Powell has like 4 or 5 different schedules, so it's not always easy to keep up with Powell, but the ones that make the most impact normally show up pretty easily. So again, I didn't see anything where Powell is scheduled this week. But again, there'll be a lot of other Fed members talking. So that's, again, they're not really going to move the market too much other than some intraday move. Again, what is going to have the most weight is going to be Powell, earnings, core CPI, and monetary policy. And that's all we have. And like I said before, I've already listed the remaining core CPIs. I've already listed the remaining policies that are left. And now Friday is the only other event. Again, I don't think this is going to have a ton of weight, but it gives good insight into what is kind of going on. The thing is that a lot of the data you're getting is always manipulated. The Fed has even talked about this, something I've talked about this multiple times, but it's very misleading. But the non-farms are going to kind of give us a little bit more insight into if things are starting to dial back. You have to understand that a lot of banks are laying off heavily, and we have bank earnings right around the corner. You got on the 14th and 15th and 17th here. That week is going to be huge for banks. Now, typically, what we've had this past year, this cycle for this year, Tesla and Netflix will follow up the week after that, and then you'll have roll into some big tech earnings. TSM is important. I have a question mark here because they don't have an exact date. That's kind of a guesstimate. TOS is kind of guesstimating it's going to be roughly around the 13th, and TSM has been reporting on the same week as the banks. Now, this is important because of semiconductors and kind of see where they're at going forward and going into this earnings. So TSM will be very important on that week as well. As far as the chips play. And then typically if the chips do bad, they're kind of the leading indicator for tech. And then tech will soon follow. Apple had a lot of bad news this week as well, right? They're cutting production as well, which is not a good thing going forward. So FedEx, again, could have been that first initial realization that things are going to get way worse. And I've been talking to this point that we have Q3 is going to potentially start showing more than cracks in some of these big corporations. You're going to start seeing gaps potentially in these corporations. But the biggest ones, again, you're going to want to see your safe havens, your Apples, your Teslas. Google, I think, is going to be absolutely obliterated. Again, no one's going to be putting out ads if nobody's buying. We've seen that in the last quarter. A lot of major corporations cut way back on advertisement because nobody is buying. Now, again, if that report is correct that we got, people are spending more. What exactly is the question? And then something also you need to consider what just happened this week is we had a major hurricane, right? We have over the past week and a half or so, we've had two major hurricanes come through. And obviously, Puerto Rico got hit. So we have to consider that there's still going to be a lot of supply there that's going to be needed and necessary. And then you're also going to have, and then Florida just got smacked by a huge hurricane as well. So you have to understand that the demand for supplies and commodities is going to go through the roof again. So now you're going to see a surge. Inflation going to rotate back into all the commodities again, plus all the energy. And shooting everything back up. So just when we started seeing some relief there, now we got it's going to be that demand is going to increase again, and we're not even in the winter months. And this is what's concerning: is you have these random events, these black swan events that happen, even though there's a couple of the black swans we've been talking about, and things are unfolding a lot quicker than I thought they would. Again, I didn't think we'd be back here and actually breaking this level as soon as we did, but we have. And now we are in a sense of we are in a state of panic. I called it on Tuesday. Again, it was the Bank of England saved us. They gave us that one green candle. That was the only bounce. If it wasn't for the Bank of England, this thing would have just sold off. And we're talking about major supports. This thing isn't even bouncing. It's just selling. So that is what's interesting and something to keep in mind, right? You have to understand there's been moments in stock market history in which we didn't bounce, and the market just got absolutely obliterated. From your Amazons to Apples, just a fraction of what they were. And this is why these companies did stock splits. Now we're starting to see this is why they do stock splits, so they don't get hammered so horribly bad. But you have to understand that they are still going to get hammered even potentially more. And if, like I was talking about, I started talking about Europe and Bank of England this week. If Europe and their impact, just on their impact of buying bonds and how much it affected our market on Wednesday, if they implode, just imagine what's going to happen to our market. And again, average of recession is 43%, and we've only hit 25. Could still potentially hit almost 20%, another 20% on top of what we have. And that's just on average. Could be less, could be more, right? There's talks of a global depression. This thing can correct. But one thing I said and what I was talking about earlier is this the leg I am watching. This is the leg I will be buying. Because I think this is the leg in which it's going to reverse. And typically when a market gets in, especially in these higher time frames, when you start seeing these big breaks on these higher time frames, before I continue these higher time frames, watch list, Volatility is still very high, 122 on SPX. Everything else is pretty much the same. A little bit more volatility in Tesla. It's given. But now going back to the frame, these higher time frame supports, you have to understand that when you start breaking these higher time frame supports, that our 200 just sitting here on the monthly is way down here. Do I see us visiting this? Absolutely not. I don't think that's possible. Anything is possible. You have to understand that anything is possible. So don't say it can't, because it sure can. But I see us still. I mean, we could still potentially come all the way down to here, the 33.15, right? And that would be a good retest that we had before the previous, when the pandemic first started, to potentially make us a higher low potentially here. I mean, you could say this is a higher low if it doesn't hold above here, the 35.85. In my opinion, I think it's more so here. As long as we could hold above the 24.18, I think we're good. But again, panic. You have a lot of black swans. You can't really make sense. You just have to let it sell and see where it lands. But this is a leg I want to start buying in. And something I'm talking about is when you start breaking these higher time frames and getting into roughly this area between the 50 EMA and 200, this is a very strong reversal in higher time frames. So this is why I want to start DCAing as much as I can in this area, because I feel this could potentially be the bottom, and this thing could start pushing back up. And I'm not saying it's going to be a quick one of these. This is dreamy here. This doesn't happen, right? You're talking about more so these kind of things where you get these grind ups and grind downs, and not these parabolic purely just grind up. There's very few red candles in here. That's because all your red candles are right here. But nonetheless, you get stair step up, and now you're going to get your elevator down. Question is, again, where is it going to land? Now, given me being in saying that, again, typically your reversals around here somewhere. When you break that 50 and you're sitting between the 200 and higher time frames, the market will typically find some support that will reverse the market. But again, there's a lot of things that could play out. If we get back to back to back black swan events just occurring, that could be horribly bad. So just be mindful of that. But again, I think, again, at any point here, we'll start seeing a potential reversal. Maybe our bottom is 32.62, and then that's it. And then we could wick. The thing is to remind ourselves, if we open below this mark, we're gonna at least see the 33.06, I believe. And then you have to. I think you're gonna hit this. Well, you're gonna hit the support right here at the 34.86, and then you should get a retest of the 35.94. Something that always occurs is you'll get the break, the retest, and then another big leg down. That big leg down, where does that land? I think could be the bottom. So I'm waiting for the break again, retest roughly that 3600, and then just drop. And that's the leg I'm going to be paying very close attention to, because that could be the pivotal turn. Just at what point do we get that? Do we get that at the end of the year, around February, March? Could be strong possibility. We could potentially hit peak inflation. But the hard thing is at this point, again, because you had two major hurricanes come through, you still have the war going on. You still have the housing market stuff that could be a big issue. If there's a lot of bankruptcies energy crisis. There's a lot of things that could happen that could continue to make this thing start selling. Again, if it's a bunch of stuff that's not in your everyday news, this is why this melt off has taken so long, because the whole recession thing, the administration's been trying to play it off, and then again, people are realizing that no, it's actually really bad, And so now we're starting to sell. Now that realization is starting to sink in, that the Fed is going to continue to hammer rates. And they have been very hawkish again over the past week, that rates are going to continue to be piled on, that they're not stopping until inflation makes a dramatic swing to the downside. Then at that point, I think they would actually look to start dialing back. If they start dialing back too soon, you have to understand that inflation isn't coming down quick enough, and they have a very uh, junky tool to do the trick, essentially deterring you from buying. And obviously, what happened on Friday, and understanding that the customers continuing to buy. I don't know how they're doing this. People, I think, are working multiple jobs just to keep up with inflation, and realize that, or however that number is manipulated. I think that number is manipulated very badly, because I don't think the average person really is going out and purchasing all this stuff, because of the fact that things are just extremely expensive, and now that rent is so sky high, uh, and then you have the demands coming in for energy and stuff again. I think we're going to fold pretty heavily. And then again, if this all plays out, I don't know really where we're going to land. Maybe we'll just continue to sell off, or maybe we'll have just that one major leg down is kind of really what I'm going with here. And then again, when panic kicks in, none of this makes sense anymore. It's just going to sell and sell and sell. But understand that once we get another major leg down, I think the market's going to become numb to any new bad news. Even if it's like really bad black swan news, the market might just become numb at that point. But it hasn't really had that yet. And so that's why I'm kind of looking for that last major push down to really start buying and DCAing. And then, which I think could unfold this week. And then I think that the European implosion could help drive that and give more gas to the downside, which would allow me to DCA even more. Again, this is not financial advice, but this is what I'm looking for. And again, if we're averaging for that 43% correction, that's what I'm looking at. So I know that was very long-winded, but I think a lot of that stuff needed to be said on what could potentially going on here. So again, really watching again next level 3,500. Want to see how we open again here on Monday. For this, I think we could potentially hit 35. Then we can get our earnings rally before we get the bad news on earnings, or Europe, and then just tank down to the 3,300 is what I'm thinking. And then at that point, we'll kind of see where the market is and what is currently going on in that situation. If events keep unfolding a lot faster than they think they are, this thing could get worse and it won't matter. And then let's just start buttering. Obviously, we haven't had much of a pump. The only reason we did pump because we thought we were getting quantitative easing, and then that which drove the bonds up. And then all of a sudden, we just, as soon as that stopped, so did everything else, and everything started selling again. So again, we'll have to see. So that's where I am with SPX. There's a lot of, again, really, it's a very bad sentiment. The dollar did have some ease, and two things I do think you should be watching, and I have been watching very closely, is the dollar and the bonds. Obviously, those are things I do watch, but right now, again, it's events. I'm very much event driven. Yes, the dollar and the bonds do drive the market. For the most part, that's what's essentially been driving the market. But you have to understand it's the events that occur that cause the dollar and the bonds to move up and down and get manipulated as much as they are right now. And so that's why I watch events opposed to just watching the dollar and the bond, because of that fact. It's more of a delayed kind of reaction. Watching, as soon as this event occurs, you'll see the dollar or the bond move up or down in that fashion. So with that being said, we're going to have to see. Bitcoin is holding very well. But again, I think just like the markets, it's going, when the market starts really getting panic mode. If this is the panic week after the break, this thing I think will sink very much lower than it currently is. been holding that, heavily investing in Bitcoin at this point. So we'll have to see if this does hold this week. And again, if it breaks that 1800, I think it's pretty much done at this point, which could strongly be the case. Again, I think we could still revisit some of these lower levels. Again, in my honest opinion, I wouldn't be surprised if we broke below 10K. Although if we do break below 10K, I think your time in anything below 10K is going to be very limited. And then I think this thing's going to pump back up. I do believe Bitcoin will lead much, much higher on this turnaround when this thing does reverse. I'm very much on board with that. But again, I think general market sentiment is going to drive everything down even further. So we'll have to see how that does play out. But that's what I got for that. Tesla has been struggling. It's been holding this 268 level really well. Again, I'm looking for it to break and test the 254. Again, kind of watching the same thing on the market. We're going to get a break, going to hit that support, then get a retest. That's what was strong support, which is now strong resistance for a very hard rejection, and then potentially see Tesla around this 222 is really where I really want to get it. So I want to start really buying, and then potentially even down to the 208. But I see it falling below here. I don't really know. I mean, the market has been hit. I'd say it can't, but I think we'll see Tesla at these levels, probably very briefly, in my opinion. But I think we will be back down here within potentially another month or so. Especially if we get really bad earnings, I think this could sink this down pretty low. So gonna have to see how that plays out. But that's what I'm watching there. BA's currently sitting at support at the 121. Could sell a little bit more, the 113. Again, this thing I think will break and head down to 100 very easily. Again, it looks just like the market. This is just what's going to happen in general. When there's fear and panic in the market, everything's going to look the same. JPM actually broke, retested on Wednesday, and now it's getting a break. This thing could sell pretty far down. I wouldn't be surprised if it's down to 90 by this time this thing is over. And then you have to understand, a lot of the banks have come out with big statements about all of their the people they're letting go. That is just 2 weeks away. And when that starts coming out, if the banks do horribly bad and their guidance is horribly bad, you haven't seen a gas to the downside yet. Again, because earnings will tell the truth about what's really going on. And if the earnings are good, we could reverse this thing. Maybe this is the leg we should be buying right now, and this thing reverses heavily back to the upside. It could be a strong possibility, although a lot of the things that I feel have weight aren't pointing that way. And then again, we still haven't seen, you're still avoiding the fact that Europe is just imploding as we speak, and that you're about ready to see a very, very, very a nasty implosion go on over there, and it will affect us directly, in particular with the dollar and the bond, and see where that goes. And so these are things you have to pay attention to, and what are going to drive this market. And again, I'm not trying to be bear. This is the bad thing. This is the whatever. I'm trying to say you need to be paying attention, because I think this is the pivot point that's going to reverse and potentially get a very good entry for some really, really good stocks you're probably not going to see for the next 5 to 10 years after this, only because of the way the current market is set up. So that's why I like to emphasize the current state, and that we still got some downside. But once we hit that last strong leg down, I think is the leg to be watching. So GS, same thing, still got some more downside to the 279. Then getting break that very well could. I think these banks after earnings are just going to do really bad, and it'd be interesting to really watch Goldman Sachs going into this one, because they did lead a lot of the banks the last earnings. So this would be one to watch, and if this one cracks, then that would be your panic. JPM's already been falling apart, so GS would probably be a better one to watch going into the next earnings. Bank of America looks just like the market. So that's just something to keep in mind. But yeah, so that's pretty much what I got. I know this video is extremely long. I don't apologize for that. I'm trying to explain more in depth on my thought process and trying to get you on the my page if that's something you want. Obviously, if you're following me, you're trying to get my insight, and I try to provide as much detail as possible on that fashion. So if you've made it this far, I do appreciate you. It is a long video. Go ahead and drop a like button, and until next time, I'll see you guys later.